next 30 minutes, we have to talk a lot about today's market action, more from the business world and apart from that as well. So let's get started, and firstly, let's have a look at the markets. What a day it was. We started the day with weak global cues when Nasdaq futures were trading 2% lower, and on the back of that, the Indian markets were seen to be in red all throughout the day. Nifty and the benchmark indices, after a 3-day winning run, the Dalal Street finally snapped its gaining streak, and the Nifty declined over 1%, closing above that 17,500 mark. While talking of Sensex, that ended 770 points lower, but except the Nifty Auto, all sectoral indices were seen to be in red today, while Nifty Bank went down over 300 points. But meanwhile, the supports came in, like I mentioned, was from the Auto Pact, wherein TVS Motors, Hero MotoCorp and Bajaj Auto were some of the Nifty gainers today. While because of that, we see that there were substantial gains on all of these stocks, but apart from that, all in all, the benchmark indices closed in red, as I mentioned. But that was about equity markets, but there's a lot of action in the commodities and well, and let's talk about the crude. Now, oil prices have cooled off some bit after the OPEC and its allies decided to stick to their moderate output plan, but that's despite the pressures to increase the supply. And amidst the growing geopolitical tensions, OPEC Plus has decided to add only 4 lakh barrels per day in March, and like it decided earlier, so that is on the stands as well. Now, prices have eased off on the back of the weak US payroll data, which led investors to book profit in that. But if we talk about the levels, then Brent crude hovers close to $90 per barrel mark, and that's still around that 7-year highs level. So some respite on that front, but still, if we see, then that is trading on the higher levels as well. So that was about crude, and the commodity pact is seen to be in action. But now let's talk about the earnings. Today it was an earnings heavy day, but later ahead in the day we have ITC coming up with the numbers. What's expected out of that? What kind of a margin recovery, and which segments are expected to perform better? Let's go across to Winnie for all those number crunching and what is the factors to watch out for in ITC for today's earning that's lined up ahead. Over to you, Winnie.
The FMCG and cigarette major ITC is set to post its Q3 FY22 numbers, and overall, when in terms of numbers, revenue growth is expected to see come by around 4% on a year-on-year basis. Mainly, the FMCG business is expected to see a good growth of around 9% coming in, mainly aided by the strong product portfolio. Other than that, the hotels business obviously has also started seeing a recovery coming in. So strong growth is expected in the hotels business as well. We'll have to keep an eye out on how the agriculture business and the paper business also turns out, so surely keeping focus on that. Moving on, cigarette volume, which is very important, and we keep an eye out on. Cigarette volume is expected at around 8% for ITC. Now, mainly this cigarette volume which we are seeing, we expected it to see a recovery, and obviously it's tracking slightly above the pre-COVID levels as well, so surely keeping focus on that number as well. Moving on, talking about the profits expected to go up by around 6% on a year-on-year basis, and margins of the company, we are expecting an expansion coming in the EBITDA margins of the company of around 200 basis points, and now this mainly is going to be aided by the favorable product mix, and the hotels also is seeing a meaningful recovery, so that surely does aid the margins as well, but we'll keep an eye out on that one as well. Other factors we'll be watching out for: the recovery in the cigarettes, how is the volume, the mix, the impact on the margins as well. FMCG EBIT margin is important to watch out for. Recovery in the paper business is an important factor as well, and other than that, the outlook for the agri and hotel business are the key factors that we'll be keeping an eye out on.
Thank you so much for that, Winnie. So ITC will be in focus today because definitely after the budget, we saw some kind of a substantial gains coming in on the stock. The stock is up around 6% after 1st of February, and today as well, when the markets were under pressure, the stock closed with 0.5% gain. So all eyes on ITC going ahead, and we get you the latest and the first cut on the numbers as well. But staying more with the consumer names, Titan declared its number today, wherein riding on the strong demand across its consumer business, Titan's Q3 profit came in at 987 crores, a solid jump of 135% on a YOY basis. Now, revenue excluding the bullion sales grew by 36%. While talking of their other segments, watches and wearable segments saw a better growth in Tier 2 and Tier 3 cities as compared to the metros, and the management is hopeful of ending the year on a positive note. But let's go across again to Winnie, who tracks the consumer space for us, and Winnie is having the full fine print of how the Titan's numbers look like today.
A shining quarter coming in for Titan in this December quarter. Good set of numbers coming in by the company. Revenues in line, a strong beat on the profitability as well as the margin front for the company. Now, overall, let's look at the performance of the company. 36% growth coming in terms of revenue, which is actually excluding the bullion sales. If you include the bullion sales, it's a 30.5% revenue growth. Nonetheless, a good performance coming in from the company. Now, segment-wise, when you look at it, jewelry segment has done quite well. They've reported mainly their growth was driven by the festive season as well as the wedding season coming in October and November, which aided the sales of the company. Walk-ins also were higher for the jewelry segment, and jewelry segment accounts for 80% of the revenue, so surely good revenue comes from this, and they've seen a very good growth there. Overall, the wedding sales were up by 40% on a year-on-year basis as well. And the studded ratio has also seen an improvement coming in at 26% of the overall mix. So surely that also somewhere down the line aids the margins of the company. The margins for jewelry segment were driven by the operating leverages as well as a better product mix and higher realization for the diamond price appreciation as well. So surely interesting growth coming in the jewelry segment. Watches segment too witnessed a strong demand coming in over there, strong good growth across its brands as well as the company saw a good growth in the Tier 2, Tier 3 cities versus the metro cities as well. Eyewear division also strong growth coming in from the company across its band and a good uptick that they've seen in the international brands as well. So overall, all in all, a good set of numbers, strong beat on the margin fronts as well. Overall margins coming in at 14.7% versus 11.7% on a year-on-year basis. So strong expansion there as well. And the management has highlighted that yes, they have seen an impact of the COVID third wave coming in the current quarter that we are seeing by due to the Omicron variant. So keeping an eye out on that one as well. But the company is very hopeful that they will be ending this year on a positive note.